Our next panel, a star-studded panel once again, is going to dive into stablecoins and their role when it comes to exchanges. Please welcome the panel and its moderator, Odelia Torteman.
Good afternoon, everyone. Welcome. Thank you for joining us to this beautiful panel this afternoon, focusing indeed on bridging markets and the changing roles of exchanges together with stablecoins. In this panel today, we're going to explore the evolving roles of the different industry players as they basically upgrade their value proposition to integrate stablecoins and to bridge institutional liquidity into the crypto markets. And in order to do so, we have quite a fantastic panel of experts here, spanning from different types of players, I would say, in terms of regions and roles, that we're going to discuss together. So we're going to start with a quick introduction of the panelists, and maybe I'll just start by briefly introducing myself. So Odelia Torteman, I lead corporate adoption for XRPL Commons. We are a Paris-based organization, but operates globally, focusing on supporting the adoption of the XRP ledger, which is an L1 decentralized protocol, launched in 2012, mostly associated with Ripple, but basically designed from inception to support financial service-based use cases, from cross-border payments to different types of asset tokenization and asset transfer. I've been doing digital finance for 15 years now, previously with the World Bank, beforehand with Deloitte, leading the blockchain and the fintech arm. And I'm extremely excited to be exploring this really inciting intersection with our panelists. So over to you, Giovanni, please.
Thank you very much, Odelia. It's a pleasure to be here. So my name is Giovanni Cunti. I'm the CEO Europe of Gate, one of the biggest crypto exchanges in the world. Actually, this year we celebrate the 13th year of activity, but we lead the segregated activity out of Malta. So I've been in this space since about 2017-18. I have a long background in traditional finance, remittance, and actually I've been experiencing the pain point of people in transferring funds from one continent to the other one, and actually the topic that we touched today is going to be very close to that one, because stablecoin somehow is one of the use cases they help to bridge that specific gap. So yes, very much excited to work on this in this environment for one of the top crypto exchanges and looking to all the new features that we're bringing to the market every single day.
Hello, everybody. My name is Ivan, and I'm a founder and the CEO of 3S Money. 3S Money is a B2B payments and FX platform. We are helping companies from traditional industries to move money cross-currency and cross-border. I'm excited to be here today, and my challenge personally today that I'm here almost illegally, because when my compliance team found out that I'm going to speak at the Digital Assets Conference, they were like, oh my God, it's risk, risk, risk. Please be careful, don't upset the regulators, don't upset, well, everybody else. And they gave me a list of things that I cannot say or mention. But don't worry, I'm going to say it anyway.
Thank you, Ivan.
Hi, Amy Oldenburg, Head of Digital Assets at Morgan Stanley. I feel your pain. I've been in your position before, although times have changed a little bit now, so we're a bit more flexible with what we're saying on digital assets. Prior to heading our digital asset strategy across the firm, I was running our emerging market business, so I've been at the firm for 26 years, and most of my time has been spent in the emerging markets.
And I'm Stephanie Hurry. So I was born and bred in emerging markets, actually. So I'm originally South African and worked in banking, investment banking and strategy there before crossing over to the dark side of crypto and digital assets. And I'm currently here representing Boerse Stuttgart Digital. So we're the crypto and digital asset subsidiary of a really traditional, dare I say, boring German stock exchange. And yeah, always a good question around what we're allowed to say with compliance, but I think we're in quite a special position in that we've been in the retail crypto space since 2019, and then built out an offering for institutions. So we're now talking to banks and brokers and trying to get them to make the same leap of faith as us to get into the space.
Thank you, Stephanie. Thank you, everyone. We'll do our best to stay within the boundaries of compliance. So stablecoins, I mean, let's start a bit by looking into stablecoins as an infrastructure, right? 2025 was a huge pivotal shift. We saw a huge transition from experimentation to live use cases. We've seen the volume of stablecoin transactions grow, really positioning them from one side as a core monetary base, but from the other side as an infrastructure layer. And we're seeing much more movement, I would say, towards the more payment purpose-built blockchain rails, such as the XRP ledger and others. And in essence, we're seeing much more that the conversation is moving from which stablecoin to issue to on which rails and which settlement rails are we going to do it. And my question to you is basically, how do you really see stablecoins as an infrastructure, or do you see them still as an adds-on product for many organizations?
Maybe let me take this one first. And again, I'm speaking from a centralized exchange point of view, and I'm very, very curious to hear what my colleagues here at the panel are going to say. We start to see that one as infrastructure now. We can be very much clear about that. We've been a long way. We just built that system. As you say, the numbers have been growing and growing, but at the moment it's a fundamental infrastructure. Without stable coins, we can say we'll be pretty much not in the position to operate as a centralized crypto exchange. All the infrastructure, everything just goes around that one, and has been building well beyond that point as well, in terms of usage, in terms of what our clients are doing with that, in terms of all the possibility that the stable coins have brought to us. So definitely a core infrastructure for a centralized exchange, always in demand, always in demand to add more, but this is how we treat them.
Thank you. Ivan?
I would like to speak from the client's perspective. At 3S Money, we are servicing customers from EU, UK, and the Middle East from a variety of industries: shipping, logistics, commodity trading, import-export, provision of services like IT and marketing. And we decided to ask them a couple of months ago whether they are already using stable coins or they want to start using stable coins. And it turned out that around 80% of our own customer base are already aware of this product or using it actively. And if you ask me about the actual real-life use cases that are coming from what you call traditional finance, that's firstly, it's settling with clients or suppliers from emerging markets or from those economies where it's difficult to send normal money or where there's strong currency controls. And the second most common use case is cross-border payroll and paying salaries or paying to freelancers, because digital nomads, they don't see the difference anymore. USDC or USDT is just yet another currency, like dollars or euros or everything else. So I do believe it's a great tool for infrastructure and to settle treasury funds for financial institutions. But again, looking from the client perspective, it's so important that SMEs, businesses across the globe, now start utilizing stablecoins in their normal operations.
I can just continue on that thought and say, it's really gotten stuck. A lot of the conversations has been stuck in the payment side. And especially coming from the emerging market side, as you had mentioned, a lot of cross-border activity. It was a need because other opportunities didn't exist to send money in as efficient of ways. I think some of the things that we're challenged by now, and one of the things that's at least very frustrating for me, is we start talking about more tokenization of products. That payment, the cash leg is a payment. There are way more payments in the entire infrastructure of financial services than we're getting credit for. But I think the thing that's also happening is I'm in a lot of conversations where they want to settle that tokenized trade and then off-ramp back to fiat. And I think that's where we need to really understand and try to play it forward. How do we stay on the digital side of the rails to allow the efficiency to really start adding value and compounding over time?
Yeah. No, absolutely. And I think maybe a bit of a technical point, but you kind of touched on it. I would actually say that the stablecoins themselves are not the infrastructure. And it's, the rails, the processes that we're putting in place, the standards that we need to ensure it's interoperable, that's the infrastructure piece. And as we issue more and more of these tokens, or we see banks coming together in consortiums to issue tokens, or to issue stablecoins, that's a piece that we have to build together, and it unfortunately takes some time in financial markets. Like I think to come up with, if I have it correct, I think ISDA was formed in like 1985, and it took 15 years to get that really adopted properly. And I think that's the infrastructure piece we have to work on, but not at all contradicting the fact that stablecoins are a huge part of the way the future treasury management and payment systems, remittances are going to work.
Yeah, thank you. Thank you, Stephanie. You're also touching the point, I mean, as this ecosystem continues to grow, it also requires different functionalities. And it also influences, I would imagine, the strategy that each organization embrace. Keen to learn, maybe Amy, starting with you. I mean, how does an organization like you choose the strategy? Where do you want to play in this ecosystem? Either issuing a stablecoin, supporting a stablecoin, become a liquidity provider for stablecoin?
So I think the low-hanging fruit, again, it's just kind of where the activity is. It's in payments. So a lot of the stablecoin work that we're doing is on the payment side of the wealth business. With that being said, it touches everything else. It touches our FX desk. It touches every side of a tokenized asset that we're looking to roll out in the future. I think the other thing too is even with asset management business, we need to be able to both take subscriptions and redemptions. We're doing in-kind transactions in crypto now. There's no reason why we wouldn't do in-kind or subscription business in stablecoins in the future. But to your point, the infrastructure, that's a heavy lift to get done across the whole organization. So the strategy is really on that infrastructure build out.
Stephanie?
Yeah, and I would say for us, and probably for a lot of institutions, you'd start with your core business when you say, okay, how is this new technology going to impact us? And because we have been in the crypto space for some time, and that's effectively where some of, USDC, USDT, and the adoption was driven really by the crypto industry, and one of the challenges were this lack of ability to on and off ramp fiat. And so what we see now when we're talking to banks that have a crypto offering is that is the most concrete use case for stablecoins, so trading a crypto against a stablecoin, particularly in jurisdictions where that means the end client doesn't have to pay a capital gains tax. However, that is not necessarily the easiest story to sell to your board, right? When you're putting together the package of what's my digital asset strategy, it's much more senior management or board friendly to say, we have an approach where we're going to look at some treasury management use case, or, and it's interesting, you talk about payments. The payments come with an additional regulatory overhead in Europe around the travel rules, so it can make it a bit difficult. And what we're seeing here is a little bit more the banks looking for solutions in their internal environment or in a wholesale environment rather than retail payments initially, just because you have these like SEPA, for example, you have quite efficient payment rails that exist, and you have to make it better for retail for that to make sense.
So absolutely different use cases, right? Each one also requires a different flow, different operating model. Sometimes organizations need to prioritize. A lot of the questions we are facing with are, should an organization pursue first a stablecoin or a tokenized deposit? Obviously, very different creatures. What are your insights there? I mean, which one, of course, again, like we said, stablecoins are much more open, tokenized deposits are much more internally. What are you seeing in your subjective markets?
I can speak from the payments industry on the actual stablecoin use case. And the adoption of stablecoin is driven by the actual demand from the end client. And there is this concept that we touched briefly and the industry has been promoting for over a year now, which is called crypto sandwich. And I don't quite believe in that. So in a nutshell, what it is we give a client a stable coin to settle into another country, into another market, and then we give them fiat back in the local currency. And I think this is completely wrong. I think the new generation of consumers and new generation of businesses, again, they see crypto as just yet another currency. They don't need to convert again into their local currency. They are very comfortable having USDT in their wallet and spend directly from that wallet. So whether we like it or not, I think crypto sandwich will die out in the next couple of years. I think there are lots of payment methods now available directly from the wallet itself. So yeah, there you go.
All right. I'm curious, where is the sauce of the sandwich within that? So I think, again, different aspects, of course, payment has been key, everything around tokenization. I want to speak a little bit about collateral, right? Stablecoin really becoming the new monetary layer, serving a lot of other DeFi-based applications, from credit to lending to other, specifically, again, for the more financial players. Where do you see them sit as collateral, Giovanni?
From my side, and again, I'm speaking from a centralized exchange point of view on the settlement side. Now they are used more and more for settlement payment. As I said, we saw that the usage of a stablecoin from crypto asset service provider has been evolving in time. And at the moment, one of the clear user cases that are coming is fast settlements that you want to have to put in place. It's fast, reliable. You are going to have the backup of the regulation that is covering you, so it's going to de-risk all the problem that you were having before, and is getting on that one. And we see that segment of that application in particular is growing, and we expect that one to be much bigger in the near future as well.
I love crypto collateralized lending. It's perfect. Yeah, it's both speedy settlement and, more importantly, execution. Yeah. So yeah, perfect use case. We are now exploring opportunities to bring to the payments platform a provider that would be able to deliver lending on smart contracts, specifically run on stable coins. So I think it's a great use case for the industry. After payments, and then settlements, that's the third major one.
I mean, maybe one other topic just to bring up is just that the user experience of it. So you touched on like lending and DeFi. I mean, it's still pretty painful. You could get stuck with multiple stable coins on different layer ones and have a wallet that you have to deal with. I just don't find the clients are really, I mean, if you're crypto native and you like to do this for fun, that's one thing. But I just don't see from a consumer experience it being very positive experience. And I think separately, just every other layer, like looking at legal settlement versus technical settlement, looking at tax implications. I mean, there's all these little nuanced pieces of it. We just need to clean it up and make sure that we can deliver a really strong experience for the customer.
Yeah, absolutely. And as you said, as we iron these things out, in Europe at least, we also have a MiFID world and a MiCA world. And then when you start having stablecoins as collateral for MiFID instruments, it starts to complicate things. So totally with you.
Yes, and again, I just want to build up what we just said. Yes, we need to really to build up a little bit more on the user experience, and I believe that the regulator did not help very much, especially us here in Europe. But again, with everything, we're just developing a new way to use the product, a new way to use stablecoins. We're getting there. It will take some time, but we're going to get things much easier for our clients. We know what the pain points are. We just need to address them.
Absolutely, and Ivan, I share your passion to lending. I think that indeed credit-based on-chain credit is indeed the future. Also, we've been working quite heavily from an XRPL protocol perspective on an upcoming lending amendment that would enable basically under-collateralized lending natively on the XRP ledger, enables to aggregate different types of assets that live on the XRP ledger, from XRP to RLUSD and others. So we're definitely looking forward to further develop that. And Amy, you touched a bit on the changing customer experience, right? And I think that this is a key issue because indeed we're moving towards, from one side, I would say, an increasing demand from the customer to have more services, more offering in one holistic value proposition, which also creates a lot of challenge on you, right? A few years ago, exchanges were pretty much knew their role. They were supposed to support trading, to be trading venues, and today both in a response to the regulation, but also in general, you're required to support settlement, to support 24/7 services, and so on and so forth. And I'm keen to learn, what did you had to build in recent years in order to meet that changing demand?
Maybe I'll start to take this one again from a centralized point of view. You just hit the point. 10 years ago, 11 years ago, more or less, were just simply a place where people were coming only to trade. Pretty much a single product, everything just around that one. That's been evolving a lot because people, they want to have everything all together. You need to provide all the collaterals. It was like really a shift in a completely the architectural way that we see things. You need just to build the full customer experience. You need to provide all set of products. We even, and you will see that one more and more, not only coming from us, but from everyone in this, we'll tend not to call ourselves as more as crypto exchanges, but pretty much like Web3 just providers, because there is everything that we are doing there. As we're saying, sometimes the customer experience is not there as yet, because in putting together all this set of services, it takes some time. But we built on reputation in reliability, in security, in doing things, and we've been doing more and more in the recent years. And this is a pattern that we just need to continue to build on and to evolve. But definitely we are going to be on that direction.
This is honestly my favorite question, Odelia, and I completely agree with Giovanni. Customer experience is about reliability and, more importantly, predictability. It's a debate between a super app that has everything in one application, or it's what we call at 3S Money a single button concept. Yeah, the button that does the job. Yeah, you press the button and you know what to expect. Yeah, this is very important in financial services. You see, take Wise. Have they developed a lot of different functions? Not really. Is it one of the most successful payments companies in the world? Yes, it is.
Go ahead, Stephanie.
Yeah. So, as I mentioned, I mean, we have this a traditional exchange within Germany, and I would say probably the most surprising thing that we ended up building was, well, firstly, a crypto exchange called BSDEX, if you've heard about it. But actually, post BSDEX, we realized that there was really a need from big banks to rather face an integrated broker and custodian. And I think it's a market readiness thing, right? We were quite early in setting up initially this crypto exchange, but banks didn't want to have exposure directly themselves or proprietary exposure to crypto assets, and having this broker and custody in one place meant that they had sort of back-to-back and could start to offer services to their clients without ending up having crypto on their balance sheet with having to hold very high percentages of capital against the risk-weighted asset. So yeah, I would say that was a bit of a surprise that we, as an exchange, built out a separate business.
Yeah, thank you. And Ivan, coming back to your point, right? So we see this a lot coming, the demand from enterprises or from exchanges with the desire to have, in one click of a button, a full service. And honestly, even if you don't develop it all in-house and you still use different types of vendors, it's a lot of work, right? Because you need to put all the Lego blocks in place. You need this to meet your own compliance, your customer compliance, the regulator compliance, specifically if you work in different regions. And, we find ourselves really asking, you can put the customer, you can bring the client up until here, but in the end of the day, if it's getting too complicated, comes the question, why don't you just build it yourself? So my question to you, do you have any limits with regards to which functionalities are you willing to outsource? Which one do you want to develop internally, natively?
The more risk the product bears, the better you develop it yourself and you run it all by yourself. Yeah, the less risk is there associated with the product or with the delivery channel, then you can outsource and you can bring a partner into your platform. Because the main limitation when you have a range of different products is, of course, compliance and risk. Can you manage everything efficiently in-house? Of course you can't, but you can identify what are the major risks and you can run this risk on your book. Everything else you can outsource.
I mean, we just find that there's a lot of the companies that we engage with have a component of something we need, but it's not just the full stack to plug in. So what we continue to find is even if we find a partner that we are looking to work with, we end up having to still build so much of a control layer, which is where a lot of the building actually happens. So we found ourselves even now going through a partner and build process, and I don't think there's any way we're going to get away from that in the future.
No, that's really relatable. I think in our client conversations with banks, there's components within the system that, if you come from a crypto native perspective, you maybe wouldn't think about, right? Like if you issue an ETP who's going to be, choose your transfer agent, or, the asset servicing layer above custody for tokenized securities. That's something like if you're crypto native, we don't really think about. And the one thing that I would say is, if you are like a financial institution, the number one thing you absolutely can't outsource is your clients. And that's something we see actually sometimes a bit surprisingly, banks saying, okay, I'm going to use some white label solution from a partner and I'm going to share the KYC data with them. And the lines are really blurring between who's a crypto fintech player and what's a bank. And it's a bit naive to think that these players are not going to come in and take your clients and start selling them other products. So I think you always build on your core and make sure that you cover the elements of the process that you think are highest risk. If you're a custodian bank, you build up your own custody for sure. But number one thing, you should keep your client interface.
Maybe just because you mentioned ETPs, I think one thing we found too is when you're taking on multiple custodians potentially to help manage risk across some of these ETP products, we found that there's no standard in workflow process. Yeah. So you'll even find different workflows depending on who you're working with for the same service. And that makes it really, really difficult for your different supporting teams to manage that.
And yes, one element, I would just want to back what Stephanie mentioned about that, what is with your clients, you need to just to keep that. But one thing that we are learning, that there is so many requests coming on the compliance side, that there are some elements that definitely you can't keep everything in-house because you need time to build that expertise. And then the trade is you want to continue to focus your expertise in developing a better customer experience, a better product, and then that part can be just sent somewhere else for outsourcing.
But I think the compliance teams will be very pleased with your answers here, with the control layer.
We did our best.
How safe we are with looking into everything. I want to move a bit to regulation, right? Giovanni, you've mentioned this. I think everyone in the room here are pretty much familiar with how structured this industry has become, right? Led first and foremost by MiCA, soon to be introduced the next generation of MiCA, something to look forward to. Also in the States, of course, with the Genius Act. In Asia, there are different types of frameworks, all looking into how can we structure, standardize, classify different types of digital assets with a huge focus, obviously, on stablecoins and different token standards. My question to you, I mean, from one side, of course, it's clear where are the advantages in having such a structured picture. But from the other side, where do you still see the gaps within where regulation do not yet cover certain types of activities or assets?
Well, yeah, again, this is quite an important point. Regulation, first of all, just had quite a lot of reliability, just helped us to expand. I can see that quite a lot of us today are in jacket, very, very formal. If you think a gathering of blockchain 5-6 more years ago was not going to be the case. So regulation really helped us in building this reliability and access to masses outside the core crypto business. But there is one point that I'm noticing, and again, you mentioned about MiCA, you mentioned about the American regulation that I do not know very well. I'm mostly focused in Europe, but there is one point. We just are incurring in the risk in getting like different silos. So what MiCA is stating for Europe is not what's happening in the United States. And again, just to remain to stablecoins, all of us that we want to apply for MiCA to get this license, we had to rush at the end of 2024 to delist the USDT, which was until the day before our main stablecoin was 90% plus. But we understood that MiCA had a different approach for that. in United States, of course, they see things in a different way. There is the risk that these different regulators on continental base, they speak different languages, and that one in the long term is not going to benefit the overall clients, that one, because you want to have someone that is harmonized. I just hope that this is the next step is continents, and then we're going to build something on the top of that. But definitely there is an issue and there is a pain point that, because again, USDT using the vast majority of the world, not used here, and we suffer for quite a lot of clients, and they decide, okay, you know, I like your service, I like your exchange, but you do not provide what was my main currency, then I'm going to find that one somewhere else.
Giovanni, but isn't USDT still the main stablecoin?
It is, and this is exactly the main point. So we are just ring-fenced to work with with the USDT in Europe and to suffer quite a lot on that. So this is exactly my point. I understand, you know, of course we are not going to do that, but still USDT is still the biggest by far, that one. And in Europe, regulated entities, they can't provide that stable coin to their clients.
Exactly that. I think that exclusion of USDT pushed a lot of businesses outside of European Union and outside of MiCA regulation, and they will never come back. That's a big issue. However, I believe that the whole MiCA movement, even without deep understanding of what it is, gave consumers across European Union and businesses across European Union so much awareness that they're now happy to explore, happy to experiment, without, again, digging deeper into what it means for them, how it protects them. It's just a movement from the Euro Commission to say, yeah, it's legal, go use it. And that's perfect.
I think we have that in Europe and the US, where they think they've kind of like opened the doors and opened the gates to go forward, but then as you start working through the process, you just hit obstacle after obstacle, and even as a global organization, we have Basel III, we have the Fed, we have the local jurisdictions that we have to manage to the regulators. Then you're trying to tokenize things, and anything around asset management products, there's no clarity in terms of can they hold tokens, can they touch stable coins, how does that all work out? So I think it's still pretty bumpy on the regulatory side. We just have to keep working through those workflows.
Yeah. And I think if you just have a last touch point on like the MiCA region, I mean, there it's quite challenging if you have banks, for example, issuers that want to be present in multiple countries across Europe, because you still have like a maturity gap between the national competent authorities. So, if you a big bank and you're operating across Italy and Germany, or Germany and Sweden, for example, you might have a very different conversation with the different regulators. And I think that's more of a barrier necessarily than lack of clarity under MiCA.
Okay, understood. So the key challenge, I think there's pretty much a consensus that we need one global framework, and we need to be more friendly to keep encouraging different types of stablecoins to stay within the boundaries of the EU. Hopefully they will come back, Ivan, one day.
We very much hope so.
We hope so. All right, moving to a bit of a nicer, lighter, sexiest topic than regulation, I want to touch a bit about agents. Right, obviously AI, huge revolution, specifically in the world of blockchain and crypto, with the emergence of a thing called the agentic web, agentic finance, the emergence of different types of agents that can operate, run, and manage different types of asset classes. Now even more so, obviously, as we have an ever-increasing list of digitized assets on the portfolio. And my question to you is basically, maybe starting from you, Giovanni, since you guys already have in production, right, the CLI solution, which basically enables agents to, example, machine-first access to the market. Do you look at it as an enabler, or do you actually see agents almost as the new customer segment that your subjective organization would need to serve?
It's a very good question, actually, because there is not a simple answer to that one, and you can just look at things from different perspectives. But I think that in the long term is going to be an enabler. That one will help users and more users to come to make more educated decisions, more decisions that are going to be for the medium and for the very long term, and is going to help in attracting people coming with a little bit more rationale, just to make again decisions that will help them to build up their own portfolios and to move things forward. So definitely we invest heavily on AI. There is quite a lot going on at the moment and much more that will come in the near future. But again, overall, I think that our point of view, we just see them as an enabler. But let's check. It's all the time, Odelia. When you launch something new, when you are the first, you come with your initial prevision, your initial ideas. But then it's the market itself that will take the route for the long term.
Absolutely, Ivan. What are you seeing in the market?
What we are building at 3S Money, and we don't have any crypto trading, of course, because we are in payments, but whether you are moving fiat currency or a cryptocurrency, transactional banking is very much compliance and risk heavy on a daily basis. I believe that almost 20 or even 25% of all our staff is risk-related roles. And AI is there to help manage this process more efficient, because it's so expensive, it's so slow, and it's very subjective, because every compliance officer has their own view, and if these views are clashing, then it's not helping. Therefore, the project that we have currently at 3S Money is to build a system of AI agents that would be able to assist compliance officers in different functions to fulfill their obligations in terms of, for the whole cycle of the client journey, starting from onboarding, KYC, KYB, transaction monitoring, screening, and everything else.
I think we're integrating just AI across the organization everywhere. I think we're still a little early on agents. I mean, that's still, to your point on, sometimes the humans have their own biases, but we also don't have 100% reliability with some of the AI, agentic AI either. And with some of those, we can't have any, it needs to be foolproof with compliance and risk. So I think still working through that. Hopefully we can get past the human challenges there, and hopefully we don't hit any more regulatory hurdles that just pile on other challenges for us.
Absolutely.
Yeah. No, absolutely. And I think, I mean, for us at least, it wouldn't be an entirely new a client type, right? And the principal, the owners of the assets ultimately remain the same, but it's how you interact and the guardrails that you need in place that change, right? To anticipate the new behavior.
Absolutely. I mean, a huge new world, right? A lot of opportunities. From the other side also introduces a lot of risk, right? Also with the proof of humanity and how do you ensure indeed safeguard compliance and different types of other frameworks are in place. I can share that we hosted on this last weekend the XRPL Hackathon, which was the official hackathon of Paris Blockchain Week. And a lot of our developments that took place were very much heavily focused on AI. Just to name a few, an API app store that enables agents to consume API service and to pay for them natively. So again, people don't normally say that even in the world of crypto, agents are first-class citizens in the blockchain Web3 world. We'll see, right? Definitely easier to do that than in other more traditional industries, but definitely an exciting field to look at. I want to conclude with the crystal ball question, and I would ask you to give your perspective in terms of the horizon, because this is crypto. We're going to be modest and look into a 2 years time frame because we can't really plan that much ahead. So looking into your subjective companies and product roadmap and what's to come, what are the key developments that excites you the most, again, when you're looking into the time frame of the next 2 years? Giovanni.
Well, let me just stick with the AI. As I mentioned, we just started to develop things on that direction. There is much more in the pipeline. And again, from our internal investigation, our internal UI, from our internal test, we see that there are quite a lot of interesting user cases that are coming out of that. We're really maybe not very much sure still about that one, really want to understand. So we think that AI is the single thing that you need to look very much careful when you look at about the evolution of blockchain in the very near future. And when I say in the very near future, it's literally within the next few months to come.
Thank you.
It's great that we're talking innovation and the speed of innovation today in Paris, where up until recently and even now, to buy a metro ticket, you still need to go to this ugly machine, put your card in, then got a paper ticket, and then feed that paper ticket into another machine at the barrier to walk into subway.
We have an app for that now. I'm just saying.
So I would place a bet whether next year at Paris Blockchain Week, the four of us would be paying for our tickets or for coffees with Apple Pay, with USDC in our wallets. That would be a great development.
How about facial recognition connected to your wallet?
What's that?
Facial recognition connected to your wallet.
Yeah, that's okay.
I think 2 years from now, at least at our organization, we'll have spot crypto trading. I think we'll continue to see this convergence where in the past we had traditional and crypto native firms. We're going to look a little bit more like a little bit of both, and I think we'll probably also see crypto native firms doing some business that we've historically done. So I think that path forward will continue to gray going forward.
No, absolutely. And I think on a similar point, at least when I got into the industry in 2021, it was really with this kind of naive optimism that you're really going to have this huge disruption in financial services, and you're going to move. We used to have certificated shares, and then dematerialize, and everything's going to be on the blockchain, and here we are 5 years later. But I really do see now the roles shifting, right? You do see things moving in terms of the roles that different players have. Like, for example, as you said, the conversion, of course, between traditional finance and crypto. But I think in addition to that, you also have this, like the roles that the different players in the crypto ecosystem have. So for example, we're a service provider, and in the past we go out to banks, we talk to them, how can we help you get into crypto? And now we have the banks approaching us saying, hey, can you help us distribute our stablecoin through your retail channels? And then you can have a proper partnership conversation around, hey, how does this look? How do we do it together? And I think that's really positive.
Thank you, Stephanie. I think that's a great note to end with, right? Since this panel was around what are the roles of exchanges and traditional infrastructure providers in this new economy of stablecoins and digital assets. And I think the answer is it keeps on changing, right? Today you're on this side, tomorrow you're in another. Key will be to keep growing, listening to customers' design, demand, also aligned with compliance and regulation, and creating new solutions. So I'd like to thank you all for joining us. Thank you all for being here, and enjoy the rest of your day. Thank you.
Welcome to Signal Week.